The markets do just enough to fool most of the people most of the time. And at these stages, this is the trickiest point in time. You can see that we've been trading around 107,000 multiple times now over the last 10 months, going back to the first all-time high in December. And as you can see with this list, some of the indicators we've been tracking for months here are beginning to break down. Now, I'm not flipping bearish yet. I'm still macro bullish. There is still signs that this thing can continue on, but with each of the indicators that we've been tracking as they begin to break down, it makes it less and less likely for much bigger upside if we do get that upside. Hit the like button, subscribe to the channel. I haven't flipped yet. We are getting close here, but we got to keep following the charts, and that's what we're looking at in today's video, along with gold, silver, navigating your portfolios, rotating assets through these market cycles. So heaps to get through with you. 50% levels, let's start there. We've broken the short-term 50% at 112,000. The idea with the 50% levels are to give us an understanding of strength and weakness of the move, and the shorter the time frame of the 50%, the less important it is for the macro cycle. It's important for the short term, but for the longer term, not as important. Note how the market bounced up. We got rejected at 116, and well, what happened from there? It basically rejected and came back down. Now we find ourselves at this low around $108,000, $107,000. It's been here multiple times. Ideally, this time it holds. Now, there are a couple of things to suggest that maybe, just maybe, it will hold. One is the sentiment. And the sentiment was extreme fear again at that low. And if we zoom in, you can see on Sunday, and remember this reading is for the day before. So that's for the, if it comes up on Saturday, it's for the Sunday, it comes up for the Saturday bar. And that was at 24. Today we are at 22. So that's for the Thursday bar, of course, being Friday right here. So Thursday's bar came in at a low of 107,460. And Friday there, you've got 107,000. So it's slightly higher at the moment. And that was one of the other extreme fearful days there, Saturday 11th. And then, of course, you got the reading on the Sunday. But these 2 days were that time when the market was coming down from those high points. That was from greed all the way down, just marginally missing extreme fear. And that movement is the largest correction we've seen in sentiment for quite some time. I'd have to go back and check over the charts, probably towards the tariff crash. That was a pretty big reversal in sentiment, all the way from greed, skipped neutral, almost skipped fear, and jumped straight down to extreme fear. The following day that happened, it did get to the extreme fear. So I guess I'm calling it the saving grace at this point is that we've got a slightly higher low in price, yet the market sentiment, what people are saying, feeling, thinking, but not necessarily doing, because the doing is in the price chart, is that they are feeling more fearful now than what they were at the low of Friday there, and then Saturday as well. So the next few indicators we'll look at, which we've been covering now for many months here on the channel, aren't as promising as those. So the macro is still bullish until we break down past the 50% levels. That's what I've been giving you here. That's the macro look. And those longer term 50%, one of those being 100, and you've also got the swing low there at 98. So if the market is, in this case, Bitcoin is to break down from those, you're probably setting up more so for a lower high to form. And we'll be able to cover that if, and let's say if, not when, but if that does eventuate. For now, we've got this base forming here at 108. Next 24 hours, maybe by the time you watch this, it could have broken down from that level and we have to reassess. Otherwise, the bullish stance, or what the bulls want to see, is a close above 112 and then above this level here, 100 for around number 117. And then if we can get a nice quick rally from here above 118 and 120. So lots and lots of work to do there for the bulls to break this short-term downtrend. So that's the 50% and why I've got a little fire emoji here. Not looking great on the short term, still holding up for the long term. We've got to keep coming back to that. These swing charts, you can see we've got lower highs and lower lows at the moment. This could be on the verge for a lower low as well. If we take a look at the weekly chart, so a slightly longer time frame, higher highs, lower lows. It is uncertain, just as uncertain as what people believe is going to happen next. Is the cycle over from this point? Do we find a base here or maybe at 100 and then start to rally again? It's still uncertain because we're trading right through the middle of those price ranges there and at the previous support and previous resistance. So very, very close to the breakdown. So we've got 3 days left to get to the end of the week. Again, 112K, 112,300 is really where this thing needs to close. Now, the volume and ETFs, we saw mega inflows towards the peak, and now we're seeing outflows as the market comes down. So it's still on the verge here. It's got some positives, some negatives. It hasn't got a clear direction just yet, but we have seen the contrarian signal for those ETFs, meaning that when there's a ton of buying happening, it's typically around a peak. And if there is a ton of selling, it's typically around the lows. Now, we haven't seen that ton of selling yet, like we saw with the ton of buying happening. That was the second highest ETF inflows in history back a couple of weeks ago, which essentially was the all-time high price, $126,000. So we're waiting on any sort of signs that this is going to be as much outflows as possible, or the selling has been exhausted before the market can turn around. Therefore, it's still on my list here as a fire. So it's like it's at breaking point, but hasn't broken yet, as you'll see with a couple of these other signals that have broken down. Now, the thing that has been taking up a lot of people's minds and energy at the moment has been gold. Gold has been going absolutely wild, skyrocketing here. The swings to the upside have been absolutely mental on the daily chart and the weekly chart. So we may be seeing a lot of interest move away from Bitcoin at this point and people buying gold. And all you have to do is look at the asset classes. These things have been skyrocketing. Obviously, gold now $30 trillion. It was 20 trillion just a few months ago. Silver now 3 trillion, clearly over the top of Bitcoin, 2.16. And just got to go down the list a little more to look at the stock markets here at $500 million, ETH nearly $500 million, and so on. But the main players at the moment, the spotlight is being taken up by gold and silver. We saw huge lines to buy gold in Sydney recently. This has gone all over the internet. Look at this one here, was 8 days ago. Everyone lining up to buy some gold. But now this has gone viral on news outlets in the last day. You can see this was posted 8 days ago, and the news outlets have talked about it in the last day. So they're using footage from a week ago. Gold was at 4,000, now it's at 4,400, but there is a lot of signs of this FOMO buying to the top, but we're not talking about shorting the thing yet. You've got to let these things play out and see some turnaround. So I'm going to cover this in future videos. Make sure you subscribe to the channel, but I also talk about this a lot with our members in terms of rotating assets towards later stages of the cycle. So TIA Premium is a place that we discuss this along with our portfolios for the long term. If you want to know more and set yourselves up, link in the video description for TIA Premium. Now, I think that's super, super interesting with where these currently sit, especially with the interest on Google Trends. Crypto, Bitcoin, gold, silver. It happened to be gold's got the yellow line here. This is at its highest search volume in the last 5 years. People are searching gold like it's going out of fashion. Silver, highest search volume in the last 5 years. That's on the green line. You can see it's the highest it's ever been, or at least in this 5-year period. Meanwhile, crypto dying out. There's the blue line at the bottom. And we zoom in, there's Bitcoin just on a slight uptick here. But sometimes it's being searched because the price is going down. So we're paying attention to that as well with how much the sentiment has shifted and how much interest has now shifted towards gold. The positive, well, the potential positive, I think, is that once gold starts to find its top and you see a lot of that FOMO just slowly die off. I'm not saying there's going to be a major collapse or that the final top is in, but of course there's going to be some correction eventually. But I think maybe we'll see some of that interest flow from gold back to Bitcoin and the whole digital asset thing, provided Bitcoin is able to maintain these levels while gold takes the spotlight. It needs to remain in a bullish structure, and the bullish structure is above the 98 to 100K. Otherwise, things get a little bit messy and a little bit sloppy from that point. So breaking on the verge of breaking down the 50%, the swing charts, the volume, the US stock markets haven't been able to recover to their new all-time high prices yet, but they're not in a, I don't believe they're in a position that they're going to break down and this is the final top where before we go into some Armageddon catastrophe for the US. It's not there yet. It's just following the same old 5-year cycle that we've been covering for many, many months now. This red line is the COVID dump and then the recovery before it had some time off to consolidate those gains from the COVID low. And at the moment, seems like it's doing just that. I don't know if we're going to get this exact same pump higher. So far, we've had the dump on the day, we've had tops to the day, and now we're in the consolidation to the day. So let's see what happens over the next 4 weeks, whether we get this further consolidation, a little rally higher, pullbacks before things start to get a little clearer towards the second half of November. So if that is the case, then it may be a little tricky for Bitcoin to gather some speed here and become clearer, meaning just those clearer trends, breaks 118, breaks a 120, and it holds those gains, unlike what it has done for the last 3 months. July top gave the gains back, August top gave the gains back, October top, and has given those gains back. So we want to see some consolidation above 118 and then the swings and trend getting clearer. So that's where it is in the breakdown. Here goes MicroStrategy on another downtrend, very similar to the previous cycle. You can see the top, the lower high, which was when Bitcoin actually topped. Then even from that high was an 85% correction. That's not measuring it from the MicroStrategy top. Now, through this period, there was a lot of interest in MicroStrategy. People thought it was going to be their saving grace, that they were going to get rich from MicroStrategy because of the X multiples that you can get from holding MicroStrategy instead of Bitcoin. But they didn't understand that MicroStrategy just can't buy as much Bitcoin when their MNAV goes down. So we're seeing that they're shrinking that. They're not being able to buy as much Bitcoin on the way up. Now we're seeing the market dump MicroStrategy. Had its highs. Now it's breaking through those lows. $360 is basically my reset point. I think if it can find a base here at 280, that's the 50% level, or at these lows here at 230 and break back above 360, it could reset the move altogether and attempt at 400 and 450 again. Difficult one, especially at this later stage, especially when Bitcoin was putting in all these all-time highs and MicroStrategy wasn't, but it's very similar to what happened last time. You got 9 months from the February top to the November top, lower high, and this time you had about 8 months from the November top to the July top. So very, very similar pattern here. As you can see from the last cycle, if it breaks down or wasn't able to get past 50%, didn't do it this time either for very long. Here's the other 50%. It's under that now. And here is the orange 50% right through the entire cycle's move. It's very close to breaking that. MicroStrategy broke that and then basically cycle was over. So this late in the move, this late in the cycle, breaking the 50%, that was the end game for MicroStrategy. Now, how can this work? How can MicroStrategy maintain any sort of structure, any sort of strength, and Bitcoin also get on some sort of run? Well, MicroStrategy could find a base at 280, 230, even at these previous highs of 180, and then rally back up. That could give you or give Bitcoin that extra bit of last strength for that last move, because MicroStrategy doesn't need to go into new all-time highs for Bitcoin to make all-time highs. Plenty of proof throughout this cycle, last cycle, MicroStrategy does not need to get into all-time highs for Bitcoin to do it. And I would argue that it's obviously the other way around. Bitcoin can go into all-time highs and it really doesn't matter to MicroStrategy anymore. They've got all the Bitcoin that they can afford and they can keep buying all they want, but the market has suggested that they don't want MicroStrategy anymore. So until that 50% is broken down, MicroStrategy, we could put it on the breaking, but I'm much more inclined to put it down as broken. It's on that broken path now, where the 50% is pretty much all that can hang in here for the next stage for MicroStrategy. Now, timeframes, that's pretty straightforward. We're at 150 weeks from the low. Last cycle was 152 weeks. Cycle before that, 152 weeks. Cycle before that, 163 weeks. And Michael's also discussed here a potentially slightly longer cycle there of about 1,400 days, give or take, what is that? Maybe 190 weeks. But the main thing he's looking at here are how many times this market, Bitcoin, breaks into new all-time highs throughout that cycle. This time we're at 7. Last cycle we're at 7. Cycle before that was 6. And the Genesis cycle, as he has called it, broke into the tops there 8 times. So maybe there is one more left here, but things are getting very, very tight to get to that point to break higher. So I did say that it was a bit of a tricky video or analysis at this point because of where Bitcoin sits at these later stages. But as we've looked at many, many times over the year, the lows, in my opinion, are the easiest points. This is December 2022, talking about Bitcoin bottoming, talking about opportunities where they are bottoming, talking about real estate's not crashing, it had further to go, and talking about S&P 500 is bottoming, not crashing, and we know that that's gone up from that. And I said most cryptos are terrible DCA investments, and of course, here we are. That's nearly 3 years ago. So not to bang the beat of that drum, the main reason I look at that is in regards to the cycle overall. And of course, as we get towards the top, I think things get a little bit trickier to try and figure out where this all ends, which is why I use the swing chart and the 50% level. But I think the easiest times come at the lows when everyone's panicking, freaking out, and we start to see where the strength lies in those assets. But leading up into these tops, because in my opinion, it's much more trickier to pick these tops, I like to exit on the way up and also exit when I see any of these breakdowns occur. So as Michael's also talked about, there are many different strategies to exit a market. Some can be on extreme greed, others can be when the market is breaking key levels. Either way, I think it's important now more than ever that you have that exit strategy. And it doesn't matter if you don't take every last penny out of the market to the upside. What matters is you leave the market with some profits. And I already hear the jokes happen is, well, you've got to get some profits to obviously exit with it. I'd argue that it doesn't necessarily have to be exiting with all those profits. If you have none, you still need some money to survive that next leg. So if you're just going to let any of those gains disappear or those losses mount even more, then trading investing is probably not for you. You've really got to take something out here. And as much as it hurts, follow something. Write a plan down, follow something from this point. If it is breaking this 50% level, great. You don't have to sell out of everything. Maybe it's 10%, maybe it's 5%, 15%, whatever it is for you, do that so that you at least live to fight another day. And if you've listened to traders that have been around for decades upon decades, their main thing is survivorship bias. If you've got enough money to keep playing the game, you won't die. When you die, it's game over. So make sure that you're still alive for the next stage so that you can get experience in the game and watch it for that next cycle. Speaking of cycles, let's look at the composite cycle, which is a positive. So spinning it back to something positive, we're seeing the red line composite of the 5 and the 10 year. That's a combination of what Bitcoin did in those years. It still shows further upside. Obviously, the blue line is not showing further upside right now. We don't even know what it's going to do because that's the actual price, but it is still somewhat on track here. The first half of October was always the trickier part. Yes, it looks clearer there in the red, but it wasn't as clean as what the next stage should be, well, if it follows exactly what the cycle shows. Now, that part is a little clearer, second half of October, maybe the first week there of November, and then things get a little messy and choppy. This is the closing price. So what happens throughout the day, we don't know on this line here. There's obviously higher highs or lows, right? But the closing price, that is quite choppy there from first week of November until the end of November. It does go up, but there is a lot of mess to get to that period. December comes, and then it starts to get a bit clearer in the middle of the month, consolidation or just before Christmas, and then another push towards the end of the year. So I think if we're able to get over these periods now for the next few days, there it is, 16th, 17th, maybe 20th, 21st, 18th, 19th, you can see there, up until sometime early to mid next week, then hopefully we're rewarded with a clearer trend. And that's what I've been talking about with Bitcoin at this stage. If it isn't able to find any support here at 108 and start to climb this journey higher, then we're not going to be in the hot seats with the bull market, and we're going to have to reassess this particular cycle. This is where the ride might come to an end. You can see through this entire year, things have been going relatively well. Does this ride continue on, or does it come to an end? That's what I'm watching next on our chart here. So composite cycle, so far still up. I think we'll know what happens in the next week or so. Now there's two left. USDT dominance, which at the moment is not looking good for Bitcoin and crypto, and USD. So let's start with USD and then get on to dominance and the rest of the cryptocurrencies. USD, we've been watching a double bottom here at 96. It has continued higher. Now we've got a larger pullback that's gone underneath the previous swing top. So we could be coming to the end of this short-term move to the upside. Didn't quite get to 100 yet, but we're watching for any sort of moves to 100 to 103, which could be a rejection point there for the US dollar. So there's still potential for the upside. No confirmed breakdown under 96 yet. But looking at the long term, I think this has still got further to go to the downside. And long term meaning many, many months to years, which end the cycle. So this is our 18-year cycle. Through the second half, the expansion here, generally we see the US dollar head down and asset prices climb up. And that's essentially what we've seen through this entire period. We've seen real estate go higher. We've seen the S&P. We've seen the NASDAQ, Dow Jones, Bitcoin, commodities, precious metals go higher. Some of these obviously not, like oil's been breaking down, and we didn't see the interest rates go that much higher at all, actually coming down. But through the second half, asset prices have been going up. US dollar has been coming down, and I think that's going to continue on. So that might be a saving grace there for Bitcoin as well. What isn't a saving grace at the moment? USDT dominance and the combined stablecoin dominance here, which is now over 7%. You know, we were talking about this in the last video, so like and subscribe if you haven't already. If you've made it this far, give me a little $ in the comment section. It always helps out the algorithm as well, and I know how far you've got in the video. The market cap, USDT dominance, climbing over these levels, not great if we get a weekly close here. You can see in the previous times, there has been 1 week close, one weekly close, and a snapback, weekly close, snapback, weekly close, snapback earlier in the cycle. And now later in the cycle is where you don't want to see too much time being arranged above the resistance levels, because they can eventually become support. If this market goes up, it's bearish for Bitcoin and cryptos. It goes down, it's bullish. The two levels we've been watching lately has been 4.1% and 3.7%. We want to see it break down and take out these lows for that mega bull market to come. If it doesn't, then we do not have a bull market, which is why I am continuing to watch it like a hawk. And I have to be flexible because I can't control what happens to the USDT dominance. If we ignore those signs, well, then what is the point of playing the game? If we ignore the signals that say things aren't looking good, then, well, I'll leave that up to you. You know what happens next. So USDT dominance has been on the rise, but I've got it here as a downtrend on the chart because it's not good for the rest of the market. So we're really in this sticky position here. Some things are breaking down. Obviously, USDT dominance is breaking higher, but that's leading the rest of the market to break down. But it doesn't look so bad yet for things like ETH still holding up. I think it's got a little further to run here to the upside. I'd like to see it test 4% and then hopefully get to around that 5.5% as well. That's the ETH BTC pairing, which would mean ETH USD would, at the very worst, possibly hold some ground here. If Bitcoin starts collapsing, then yes, it could also go down. But if it went up against Bitcoin dominance, well, then it wouldn't be going down as hard as Bitcoin. In the best case scenario, Bitcoin goes up and the ETH BTC dominance goes up, then we should be seeing larger gains to the upside for Ethereum on the short term here, sitting right on $3,900. So not in the worst place, but we do want to see it get back above 41 relatively soon. They are the previous highs from this cycle so far, and then back above that swing top at $4,300. So ETH not in the worst position right now compared to where Bitcoin sits. Bitcoin's much, much closer to that swing low there. So that's for ETH at around 3,400. Breakdowns are 34, 33, not looking too good, but it still has its 50% level sitting right there at $3,200 to maintain the bullish structure. Solana, on the other hand, has broken from 195. Still not the end of the week yet, so that could be the saving grace here for all of these markets. 3 days to go. The 50% level to the downside now is 175. So that is halfway between the low we saw in April and the recent top in September, down to 175. So it's still got some support there. Ideally, support, and it starts to recover along with what we've been watching for Bitcoin on the predictive cycles. So we start to see some consolidation and then take off a little bit higher, give us some of that clean move, clean air to the upside. Solana still in an okay position there. XRP 235 now. It's back underneath those highs of 240 and 260. So not in a great position overall, especially after this big collapse, but it's still above $2. So it still could have something left in the tank here if we start to see everything else turn around, especially with those ETFs promised sometime in October, which we may begin to see once the US government opens up. And overall for the altcoin market, the total three still sitting above the short-term 50% and of course the longer-term 50% there, roughly 930 billion, the tops 950 and the psychological level of 1 trillion. So it's above all three of those at the moment. We start to see breakdowns underneath 950, start to question whether there is anything left in the tank for altcoins. Breakdown underneath 900, probably not looking too good overall. It might be leading into a lower high as well. And if we did see a breakdown of the diagonal and potentially all the way back at the 50, the major 50%, that's at 740 billion. That is basically game over for altcoins. A long way off from that point at the moment, at least 26% to get to that area. So nothing to suggest that it's going to get there yet. 950 is really that key level right now that you don't want to see the total market, total three, break and close underneath on a long-term basis. For now, everything is just grinding lower, really trying to squeeze those last sellers out. And then we have to wait and see whether we get that breakdown from Bitcoin over the next 24 to 72 hours. Now, I've still got my price targets to the upside until anything macro changes. Those targets are still at the mid 130s, mid 140s, mid 160s. We have hit the first target that I talked about 10 months ago. Bitcoin will hit at least 122 in 2025. And I'm looking at that mid 140s as well. So hit the like, subscribe to the channel. I think Monday's video is going to be a big one depending on how this weekend plays out. And of course, Friday is our last day for the futures market to trade, which has been looking very weak. Sorry to bring that at the end of the video. Look at the amount of days down on the futures market. 1, 2, 3, 4, 5, 6, 7, 8 lower highs, lower lows, couple of inside bars there in the green, but it has not seen an up day since the all-time high, and it has broken the swing low here and there. So 2 of these swing lows. Need to see this turn around very soon with some strong confidence returning to the market. Fingers crossed to the weekend. Have a fantastic one. Don't sit around on the charts too much. Have your exit orders in place. Hopefully they don't get hit, and then you can enjoy the weekend. See you soon. Cheers, guys.